Nathan Krakauer and Bjorn Bilhart. The 12-week MBA. Learn the skills you need to lead in business today. Is an MBA the only way to master the business world? For many aspiring leaders and entrepreneurs, this traditional, expensive, and time-consuming path seems daunting and out of reach. But the essential skills to excel as a manager and a leader are not locked behind classroom doors. What if you could compress years of business education into just 12 short weeks, focusing on the universal core of managing numbers and leading people that applies across all industries and roles? This Blink offers a distilled essence of an MBA program, highlighting critical insights and actionable strategies to elevate your leadership and management skills. You'll learn the significance of understanding financial fundamentals, mastering financial stability, and unlocking business worth through strategic valuation and value creation. You'll also look at mastering the human element in team leadership and the nuanced art of decision-making and execution. Whether you're a seasoned executive or you're aspiring to climb the corporate ladder, these learnings can propel you toward achieving both personal and organizational success, bridging the gap between theoretical knowledge and practical application in today's dynamic business landscape. Understanding the financial fundamentals. What drives a successful business beyond just making money? In today's complex business landscape, achieving success involves much more than profit maximization. It's about creating substantial value, not only for shareholders, but also for customers, employees, and society at large. This holistic approach redefines the traditional focus on shareholder value, advocating for a more inclusive perspective that acknowledges the contributions and needs of all stakeholders. But the pursuit of creating broader value doesn't disregard the importance of shareholder value. Instead, it enriches it. Shareholder value, defined by the potential future net cash flows a company can generate, remains central. Managers must master financial metrics to align decisions across the organization with the goal of holistic value creation. There are three things to consider when driving shareholder value: profitability, growth, and risk management. Profitability, the foundation upon which value is built, comes from the delicate balance between revenues and expenses. Strategies for enhancing profitability often involve making operations more efficient, innovating products and services to command higher prices, and judiciously managing costs without compromising the quality or value delivered to customers. Growth, on the other hand, presents a dynamic aspect of value creation, encompassing the expansion of sales through both organic and inorganic means. Organic growth, like nurturing a tree from its roots, focuses on increasing the volume of sales by attracting more customers or encouraging existing ones to purchase more. Inorganic growth, more like the grafting of a new branch onto an existing tree, often involves mergers and acquisitions to rapidly expand the customer base and enter new markets. Central to sustainable growth is the continuous exploration of new opportunities. This could be through technological innovation, geographic expansion, or the identification of underserved markets. Risk management complements the pursuits of profitability and growth by addressing the inherent uncertainties of business. If a company is a network of promises made to various stakeholders, then effective risk management seeks to solidify those promises by enhancing the predictability of future cash flows. This involves making informed strategic decisions and communicating these decisions transparently to build and maintain the confidence of investors and other stakeholders. Mastering financial stability. Understanding and managing a company's financial health requires a deep understanding of several key areas, specifically balance sheets, cash flow, working capital, and cost structures. Each of these elements plays a critical role in assessing and guiding a company's financial strategy, ensuring sustainability, and fostering growth. Let's start with the balance sheet. Think of this as a financial snapshot, showing what a company owns, like assets, versus what it owes, like liabilities and equity, at a specific point in time. This lets stakeholders gauge a company's stability and liquidity, But the balance sheet alone doesn't tell the whole story. It needs to be interpreted alongside other financial statements to provide a complete view of financial health. Cash flow analysis, for instance, goes beyond the static picture provided by the balance sheet, offering insight into the dynamics of how cash enters and exits a company. It distinguishes between operating activities, investing activities, and financing activities, highlighting the company's ability to generate cash, invest it wisely, and finance its operations. Unlike profits, which can be influenced by accounting practices, cash flow provides a more tangible measure of a company's financial performance and its immediate health. Next is working capital, which focuses on the day-to-day financial operations of a company. It involves managing the balance between a company's short-term assets and liabilities. Efficient management of working capital ensures a company has sufficient fluidity to meet its short-term obligations and invest in growth opportunities. Mismanagement here can lead to cash flow problems, even for profitable companies, especially when growth exacerbates the gap between incoming and outgoing cash flows. The last key area for determining a company's financial health is cost structure. Understanding cost structure, which means differentiating between fixed and variable costs, is vital for pricing, budgeting, and financial planning. It will also give you an idea of a company's profitability and flexibility. A high fixed cost structure might leverage profitability during times of growth, but it increases risk during downturns. In contrast, a variable cost structure might offer lower risk, but also lower potential for profit in growth periods. Strategic decisions around cost management can significantly affect a company's ability to adapt to market changes and sustain growth. Together, these financial management and analysis tools equip businesses with the knowledge to navigate the complex waters of financial decision-making. They tell you how healthy your business finances are and what you can do to keep them healthy. Unlocking your business's value. Why do some businesses thrive in the market while others falter? Well, it comes down to the principles of valuation and value creation. Consider Netflix's story. On April 19, 2022, the streaming giant faced a sharp downturn in stock prices, directly linked to a sudden and unexpected loss in subscriber numbers, which in turn affected investor confidence and significantly impacted the company's overall market value. This incident underscores the importance of valuation, the process of determining a business's current worth based on future cash flow projections and market performance. Valuation is a lens through which companies assess their potential to grow and prosper in competitive markets. It involves understanding how every aspect of a business, from subscriber growth to strategic decisions, contributes to its perceived value in the eyes of investors and the market at large. Netflix's experience illustrates the volatility of market valuation and the need for businesses to continually adapt and innovate to maintain and enhance their value. At the heart of valuation lies the principle of the time value of money, which states that $1 today is worth more than $1 tomorrow due to its potential earning capacity. For an investment to be attractive, it needs to yield returns that not only surpass the baseline inflation rate, but also compensate for the inherent risks of foregoing immediate cash in favor of future earnings. This risk-return paradigm necessitates a calculated approach where future cash flows are meticulously discounted to their present values, allowing investors and stakeholders to make informed decisions about the viability and attractiveness of various investment opportunities. Discounted cash flow analysis is a critical tool here. It enables the detailed evaluation of a company's projected financial health by factoring in anticipated revenues, costs, and the overarching cost of capital. This technique elucidates the intrinsic value of a company, representing the sum total of all future net cash flows, appropriately adjusted for time and risk. It's this intrinsic value that investors eye keenly and upon which they base their decisions to buy, hold, or sell shares. But there's more to value creation than just numbers and financial models. Strategic decision-making is crucial, where every business initiative, from launching a new product line to entering a fresh market, is scrutinized through the lens of its potential to enhance shareholder value. Not only does this ensure a positive net present value for a project, it also aligns it with the company's broader strategic goals and market realities. Mastering the human element in team leadership. When it comes to business, it's sometimes easy to overlook the human element as a factor in organizational success, but it's crucial to be aware of the complexities of building and leading effective teams, acknowledging the critical role of managing and motivating people. Central to fostering a high-performing team is the cultivation of trust and the setting of clear expectations. Trust forms the bedrock of the manager-employee relationship, where success hinges not on direct control, but on careful delegation and faith in others' abilities. This dynamic shifts the traditional notion of power, underlining the importance of mutual respect and understanding in achieving organizational goals. Setting expectations becomes an art form in itself, requiring precise communication to align individual contributions with broader objectives. Feedback, both a tool and a challenge, serves as the beating heart of people management. It navigates the tension between driving immediate results and nurturing long-term growth. Effective feedback is not just about correction, but about guiding and encouraging, with specificity and timing as its hallmarks. The goal is to illuminate the path to improvement while reinforcing the value of each contribution, thus maintaining engagement and motivation. Understanding what fuels individual motivation, be it achievement, companionship, recognition, or purpose, goes a long way to harnessing the potential within each team member. Managers must tread carefully, ensuring their actions inspire rather than deflate. By recognizing the ebbs and flows of life and work, leaders can adapt their strategies to support their teams appropriately, fostering an environment where every member can thrive. In the end, building and leading effective teams demands a holistic approach that acknowledges the complexities of human nature. It involves mastering the art of coordination, cultivating trust through clear expectations, delivering impactful feedback, and understanding the diverse motivators that drive individuals. Through this multifaceted approach, current and aspiring leaders can develop cohesive, high-performing teams poised for long-term success and fulfillment. The art of leadership and decision execution. How do leaders transform decisions into actions and guide their teams toward shared success? The key lies not just in the decisions made, but in the human connections that bring those decisions to life. At the core of any thriving organization is the trust between managers and employees, proving that true leadership goes beyond mere commands. It's about uniting people with a shared vision, not by wielding power, but by cultivating a culture of trust, collaboration, and mutual support. Any team will invariably be confronted with social dilemmas, like when someone holds back on effort if they believe that others are not pulling their weight. In such situations, we see the pivotal role that leadership plays. It's through addressing these dilemmas that leaders can catalyze a culture of cooperation, where individual contributions are harmonized toward a common goal. This cooperative culture not only enables organizations to navigate social dilemmas effectively, but also positions leadership as a crucial competitive advantage. Leadership practices that prioritize communication, role modeling, and recognition of cooperative behaviors are instrumental in building this culture, fostering an environment where collective action flourishes. At the heart of organizational decision-making are the strategies that narrow down the available options and guide actions across all levels. One example of this would be a choice to only focus on clean energy projects. These strategies, when well-defined, act as a compass, directing teams toward desired outcomes with minimum friction. But the process of decision-making extends beyond the identification of strategies. It also means exploring options, assessing potential outcomes, and actually coming to a concluding decision. Whether through consensus, majority rule, or the designation of a sole decider, the legitimacy of the decision-making process is paramount. This legitimacy ensures that decisions are not only accepted, but also effectively executed, irrespective of whether everyone agrees or not. The execution phase of any process underscores the critical importance of alignment across teams and individuals. Even the most strategic decisions can falter without a cohesive effort toward implementation. Effective leadership will navigate the delicate balance between making informed decisions and ensuring their timely and unified execution so that organizations can truly realize their strategic objectives. In this Blink to the 12-Week MBA by Nathan Krakauer and Bjorn Bilhart, you've learned that mastering the business world extends far beyond simple profit maximization. It involves creating substantial value for shareholders, customers, employees, and society at large, with shareholder value at the core, driving profitability, growth, and effective risk management. Financial fundamentals, including understanding balance sheets, cash flow, working capital, and cost management, are crucial for assessing and guiding a company's financial health and sustainability. The process of valuation and value creation is key to determining a business's worth and strategizing for growth. This includes employing discounted cash flow analysis to evaluate projected financial health and making strategic decisions to enhance shareholder value. When it comes to building and leading successful teams, effective leadership and the ability to motivate and manage people are central. Cultivating trust, setting clear expectations, and providing impactful feedback are essential skills. An emphasis on trust, collaboration, and mutual support sets the stage for transforming decisions into action and achieving business success. Okay, that's it for this Blink. Thanks so much for listening. And if you can, please take the time to leave us a rating. We always appreciate your feedback. See you in the next Blink.